In the UK, we pay an insane amount of tax. We pay it on income received from our jobs. We pay it on any purchases that we make down the shops in the form of VAT. If we drive a car, we have to pay road tax. And if we have any savings or investments, we have to pay tax on any income received from those. But did you know that there is a legal way to pay less tax on any income received from savings and investments in what's known as an ISA, an individual savings account? So in this video, I'm going to be talking about the different types of ISAs and why you need to have at least one of them. In fact, one of the ISAs that I'm going to be talking about in this video gives you a guaranteed 25% return every single year up to a maximum of £1,000, and that is free money essentially received from the government. So make sure you stick around for the explanation of that one. So before we start running through the different types of ISA in more detail, let's first understand what allowances everybody gets in the UK before they actually have to start paying tax. So the majority of people in the UK, first of all, do get a personal allowance of £12,500 before they have to start paying income tax. So if you have a job that pays under £12,500, you should not expect to have to pay any tax on that income. The second allowance that you get is the capital gains allowance. So this basically means if you buy something and then sell it for a profit, then you're going to have to pay tax on it. So that could be shares or a fund investment, for example. Everybody in the UK gets an allowance of £12,300 on that. So if the profit that you make in a single year is under £12,300 on the sale of shares or any other investment, then you don't have to pay any tax on that. The next one is a interest savings allowance. So everybody in the UK can have or receive £1,000 worth of interest in a single year before they have to start paying tax. If you are a higher rate taxpayer, then that allowance reduces to £500. But for most people in the UK, it's going to be £1,000. And then finally, everyone in the UK gets a £2,000 allowance to receive dividends before they have to pay any tax on those. So if you've got shares in many companies and those companies pay out a proportion of their profits in what's known as a dividend, then you don't have to pay any tax on that income received up to £2,000. So you might be thinking, well, that's actually quite a large amount. Why do I need to get one of these ISAs that allows me to pay no tax at all? Well, the answer is that ISAs are there to plan for the future, and hopefully throughout your life you are going to be making savings and you're going to be investing, and the income received from those savings and investments are going to surpass the allowances here. So whilst those allowances might seem quite generous now, I can assure you that in 15, 20 years or more, once you have built up a decent sized nest egg, those allowances are actually going to seem quite small. So that's why it's really important that you think about your ISAs now so that you can plan for the future. So if you haven't heard of an ISA before, it stands for Individual Savings Account, and it is basically a type of bank account or investment account whereby you can put money into it, and any income earned on that money is not going to attract any tax. So you are not going to be taxed on it. Now, there are different types of ISA available, and the ones that I'm going to run through in this video are the cash ISA, the stocks and shares ISA, the lifetime ISA, and the innovative finance ISA. One of the main rules to be aware of with ISAs is that you are only allowed to pay in a maximum of £20,000 per tax year. And the tax year runs from the 6th of April to the 5th of April. So that means basically in 1 year, in that period there that I've just said, you can only pay a maximum of £20,000 into the ISA. If you pay any more than that, then you are going to be breaking the rules, and any amount over that is not going to be eligible for tax-free income. Now, of course, you can pay less than £20,000 into one of these ISA accounts each year, but you're not going to be able to carry forward any allowance that you haven't used. So if you only pay in £10,000 this tax year, that doesn't mean that your allowance next year will be £30,000. The allowance next year will still be the same at £20,000. So it's always best to try and use as much of your allowance as you can. One of the most popular types of ISA account is a cash ISA, and this works exactly the same as a normal bank account, except of course any interest received from the savings that you've paid in won't attract any tax, whether it's over that like personal allowance threshold that we spoke about earlier or not. Now, there are different types of cash ISA account. You can get instant access. So if you pay money in, there'll be no penalty if you withdraw your savings. Or alternatively, you can get fixed interest accounts, which basically say you must keep your money in for at least 1 year or 2 year or more in order to benefit from a certain amount of interest. So these cash ISA accounts are pretty popular, but the rates of return that they provide are very, very low. We are in a low interest environment in the UK at the moment, which is reflected in the rates that you get from cash ISA accounts. I had a look earlier and it seemed that the average rate was between like 0.5 and 1.5%, depending on how long you keep your money in an account for. So that means that if you've got £1,000 invested in one of these cash ISA accounts, the most you can expect to receive is between £10 and £15 interest per year, which isn't a huge amount. An alternative type of ISA that has grown in popularity recently as a result of interest rates being very low is a stocks and shares ISA. And this is just like an investment account. You can pay a maximum of £20,000 per tax year into one of these accounts and invest the money into shares, into bonds, investment trusts, or funds, and any income received from those, whether that be dividends or interest payments or capital gains, if you've sold a share at a higher price than what you bought it for, any of that income is going to be completely tax-free. You're not going to pay any income tax and you're not going to pay any capital gains tax. So with that information in mind, you can see exactly why these types of account have grown in popularity. They're certainly my favorite type of account. You've got a cash ISA account that pays around 1%, or alternatively, you can invest in the stock market, in bonds, in funds, and you can see returns of 10% per year or even higher, and you're not going to pay any tax on that income. So you can imagine over the years, as you are investing more and more with your savings, you can see just how the returns that you can make can build up higher and higher, and none of that income is going to be taxed. The next type of ISA that's worth knowing about that is actually way less popular, I guess because people just don't really know about them, they're fairly new, is the Innovative Finance ISA. Now this works in a very similar fashion to a stocks and shares ISA, except instead of investing in companies' shares or in funds, you are basically lending that money to other companies in the UK or globally through what is known as peer-to-peer lending. So let's say, for example, you've got 10 people that want to do peer-to-peer lending. The money that they invest is packaged up and lent through to companies, and the companies pay interest on the amount lent. So any interest that you receive as a result of lending that money to companies is not going to receive any income tax. So that again is also a type of ISA that is well worth knowing about and considering. But the one that I would say you definitely should have an understanding about is the lifetime ISA. So lifetime ISAs are relatively new and they were introduced by the government to help first-time buyers to save, or alternatively to help people save for their retirement. Now the reason that they're not only well worth knowing about but well worth having is because they give you guaranteed money from the government. So the rules are these: you are allowed to invest a maximum of £4,000 into a lifetime cash ISA or a lifetime stocks and shares ISA every single year. And that £4,000 will receive a guaranteed 25% from the government every single year. So that means you can save a maximum of £4,000 every year in one of these accounts, and the government will give you up to £1,000 every single year as a result of doing that. And that is in addition to any interest that you might receive if you've invested in a cash ISA account, or in addition to any interest or dividends or capital gains received if you invest in a stocks and shares lifetime ISA. In order to qualify for one of these accounts, you must be aged between 18 and 40, and you can only pay up to a maximum of £4,000 into one of these accounts until you are 50. So The maximum amount that you can receive from the government is going to be £33,000. So if you start investing at 18 and you put in £4,000 every single year, all the way up to your 50th birthday, then in total, you will have received £33,000 from the government completely for free. And that's in addition to any interest received or any income received if you go for the stocks and shares ISA. Now remember that the purpose of a lifetime ISA is to help first-time buyers to save for a deposit or to help people save for their retirement when they're 60. So the rules are quite strict if you change your mind about what you want to do with the money that you've invested in one of these accounts. If you do decide to take the money out to spend on something else, then the government will claw back that benefit that they've given you, that 25% benefit, and you will lose it. Okay, so make sure you keep that in mind. These lifetime ISAs really are for people that are saving for a deposit if they're a first-time buyer, or for people saving for retirement. And you can only withdraw that money in those two circumstances. So if you take the money out for any other reason, then you'll lose that 25% bonus. So now that we've covered the four main types of ISA that are worth knowing about, let's run through some frequently asked questions that you should also know the answers to if you're going to go ahead and open one of these accounts. So the first thing that you should know is that yes, you are allowed more than one type of ISA, and you can pay into more than one type of ISA in a single tax year. So let's say, for example, you open a lifetime ISA and you pay in £4,000, which means that you're going to get that 25% bonus from the government, i.e. £1,000. That means that you've used £4,000 of your annual allowance, being £20,000, which means that you can also pay up to £16,000 into a cash ISA, into a stocks and shares ISA, or into a innovative finance ISA. So whilst you are allowed to have and pay into multiple types of ISA in a single tax year, you are not allowed to open multiple types of the same ISA and pay into them in a single tax year. So if you open a cash ISA with Nationwide, for example, in a single tax year, you can't then go and open another cash ISA with another provider in the same tax year. You can do that if it's a different tax year. So this year you might say, I want to have a cash ISA with Nationwide, and next year I'll have one with Santander if the interest rates are different. But if it's the same tax year, you're not allowed to open more than one of the same account. So you are allowed to open and pay into different types of ISA account in a single tax year, so stocks and shares, innovative finance, cash ISA, etc. But you can't open and pay into more than one of the same type of account in a single tax year. Another frequently asked question is, are you able to recoup your personal allowance if you take money out of an ISA and then decide to pay it back in? I.e., if you start the tax year with your full allowance and you pay, say, £5,000 in, are you able to take that money out and then pay it back in without losing your personal allowance? And the answer is no. If you do that, that £5,000 going out and then back in is going to be classified as paying in £10,000. So make sure that whenever you pay money into the ISA, you are sure that you're not going to need it in the short term. So what happens if you want to change provider of your ISA? Is that going to be allowed? And the answer is yes, but only if you officially transfer the ISA. So let's say, for example, you have got a cash ISA with Nationwide and it's paying 1%, and you want to transfer all of the money in your ISA over to, say, Santander, who are paying 2%. Now, what you absolutely must not do is just do a simple bank transfer. So take the money out of the Nationwide and pay it into the Santander. Otherwise, you will be officially utilizing your allowance, your ISA allowance. What you must do is instead use a transfer form, which is readily available by your ISA provider. So simply get that transfer form from your provider, fill it out and say, this is the new account that I want to move my funds over to, and they will move the funds over to your new provider and you won't lose any of your personal allowance. So you must make sure that you do that for a cash ISA and a stocks and shares ISA and lifetime ISA, basically all of them. Never do a bank transfer yourself. Otherwise, you'll be losing your allowance. So that was a summary of the different types of ISA available to those of you in the UK and why they are essential to have. Not just because they provide amazing tax breaks when you're investing in stocks and shares, or if you're just investing to get savings interest, but also because they literally give you free money. The lifetime ISA is free money for those of you that are saving for either your first house purchase or for those of you that are planning for retirement. Now, planning for retirement might seem like it is years and years away and you don't need to think about it, but honestly, no matter how young you are, it makes sense to start saving for retirement so that you can ensure that over the years, your little nest egg grows and grows. And so that by the time that you do retire, you can basically be rest assured that it's going to be a happy one. So I hope that you have enjoyed this video, guys. If you do have any other questions about ISAs or investing in general, post them in the comment section below. Otherwise, I will see you next time.